Hello, everyone, and thank you so much for joining us today. My name is Anne, and I'm here with Wolters Kluwer to give you today's Lunch and Learn. It's COVID-19's impact on accounting concepts, estimates, and assumptions, going concerns and subsequent events. With Lynn Fountain, and we also have Beth Patrick here to give us a rundown on Cch Accounting Research Manager. Just a couple of housekeeping rules before we get started. You will receive 1 CPE credit when you answer at least two of the 3 polling questions that will happen throughout the webinar. Those will be registered to your CCH CPE link account between 2 to 4 business days after the end of the webinar. And with that, I'm going to turn it over to Lynn.
All right, thank you very much, everyone. Welcome. This is probably the 4th or 5th coffee, lunch and learn, whatever you want to call it, that we've been doing. We've been focusing on the impact of COVID on various accounting issues and accounting assumptions. And gosh, we're 18 months plus into the COVID pandemic, and you would hope we'd have some answers by now, but just as the medical profession still has questions, we continue to have issues that come up on the accounting side. So what we're trying to do with our Lunch and Learns is talk about different topics and kind of make you aware of the issues from an accounting perspective that COVID has actually impacted. You wouldn't think, gosh, a medical issue could impact your accounting and your reporting, but it has. And a lot of it is due to the shutdown that occurred last March, I guess, but the ongoing uncertainty. And so today we're going to talk, as you saw at the beginning, about going concern, subsequent events. We'll talk a little bit about estimates. And those are very significant topics. I've got about 40 minutes, so very significant topics that are important that you, as an accountant or a controller or finance professional, that you stay on top of. So by no means is everything here all comprehensive, but we want to give you an idea of things that you should be aware of and know. And then the last 20 minutes, Beth Patrick will give you an overview of the CCH tool, which will help you understand how you can actually do research on some of these topics and what benefit it can provide to you. So today, what are we going to go over? We're going to overview the current accounting implications of the ongoing pandemic. I'm going to show you a slide that we've seen in our other presentations, and I'll talk about what we've talked about so far, and then we're going to vote a little bit on what do you want to see next month, and we'll elaborate on that topic. And then we're going to get into why accountants need to pay attention to their financial reporting estimates as well as cash flow estimates. And most of you probably recognize COVID has caused major issues for a lot of companies in cash flow, and then that transitions into going concern and everything else. So it doesn't matter if you're a public company, private company, or a not-for-profit, whatever you are, cash flow is kind of at the top of mind, right? We learned in college cash was king. Well, if you don't have cash, you can't run your business. But a lot of times we have to, do best estimates when we're working with our forecasts and things like that. And so I'm going to give you some insight into what at least the SEC and the AICPA and some other regulatory bodies have kind of said, things you should consider when approaching those types of topics. Then we'll talk about going concern, okay? Going concern is one of those things none of us want to hear about. We don't want to think, okay, we're not going to be a going concern, but with COVID and with everything that's happened, I mean, you can probably go out in your area and be very surprised at the number of companies that have shut down. Maybe some are restaurants, maybe some are retail stores. It just depends. And some companies are on that verge of that critical issue. So it's important, and the SEC has really reinforced that to auditors, public accounting auditors. So we're going to talk about that a little bit. Then we'll also talk about impact of COVID on subsequent events. Okay, subsequent events, we always think about, okay, something that happens subsequent to the filing of the financial statements, but before you actually release them. So we'll talk about things you need to consider in that realm. All right, and then Beth will give you an overview of the CCH Accounting Research Manager. So if you look at this slide, and I've bolded areas that we have talked about in the past: revenue recognition, leases, disclosures, internal control for financial reporting. Then there's other areas there I haven't bolded, but today we're going to talk about subsequent events. We're going to talk about a going concern, and we're going to talk about that forward-looking cash flow estimates and other estimates. So that's kind of where we are. Next month, we'll focus on another topic. So with that, this is our first polling question that we want people to answer in order for you to get your CPE. And this is just to help us understand, okay, what topics would you like to cover in next month's Lunch and Learn? And we've used this to decide which topics we're going to cover when. So we'll select one of the following: inventory and goodwill, and asset impairment testing, which is a pretty significant area. And those, you know, all three, I kind of combined some of these. Forward-looking cash flow estimates. Now that actually shouldn't be there, so please don't mark that one because we're doing that today. Indefinite lived intangible assets other than goodwill, and that, or exit and disposal costs and loss contingencies. So pick one of the, you know, either the number 1, the number 3, or the number 4. We're going to talk about forward-looking cash flow estimates today. So that shouldn't have been in there, but all right. So with that, I will turn it back over and find out what our results are.
Sure thing. I mean, we're going to let it run a little bit longer, but right now we have 34% for inventory, goodwill, and asset impairment testing. I know it's going over today, but 28% are looking for forward-looking cash flow estimates, so they must want to hear more. 22% exit and disposal cost and loss contingencies, and then at 15% we have indefinite lived intangible assets other than goodwill. Okay.
All right, so just kind of the results to me probably tell us that next month we'll focus on inventory, goodwill, and asset impairment testing. So thank you for answering that. And I'm assuming we can go ahead and move to the next slide. Is everyone's answered the question, got the credit?
Yep, the poll is now closed, yes, so we can move forward.
All right, so let's talk about financial reporting and cash flow estimates. Well, we put a link in here. In June 2020, the Securities and Exchange Commission did release some disclosure guidance on considerations regarding things around operations, liquidity, and capital expenditures and capital requirements. So there's a link there that you can look at. Now, I will say too, along with Research Manager, areas that you can go to kind of understand what's going on currently and what the current guidance is for many of these accounting issues. You can go to aicpa.org, you can go to sec.gov, you can go to pcaob.org, that's Public Companies and Accounting Oversight Board. FASB is a great resource. FASB.org is a great resource that's going to have the most up-to-date information about, okay, what's going on out there and what are people worried about. But the guidance that the SEC issued that you'll see in this link said, whoa, sorry guys, that kind of went off on me. The guidance covered cash flow estimates, and the SEC stated, we continue to encourage companies to provide disclosures. And what they're looking for, they want investors to evaluate the current and expected impact of COVID-19. But think of it through the eyes of management, and also be proactive when you're revising and updating disclosures as facts and circumstances. they reiterated, okay, no, I've talked before about no, they don't expect anybody to have a crystal ball. The disclosures, though, should enable an investor, or if you're not even a public company, okay, should enable your stakeholders to understand how management and your governing body are analyzing the current and expected impact of COVID on the company's operations, its financial condition, and that includes liquidity and capital resources. So I put this here because that's an important kind of reminder to us all that for adequate financial disclosures, the SEC and the major regulatory bodies are saying, folks, you know, I know this is difficult, and gosh, we may not know what's going to happen next month, let alone in the next 60 days. But to the extent you have available information, you need to include that in your disclosures. So when we develop our estimates, what are we supposed to do? You know, again, you know, we develop estimates often on previous information or previous sales, previous revenues. And right now, that's hard to go by because you don't know how the current economic impact may affect you. But as we said, we're in unprecedented times, so research is really important. All financial statement preparers or accountants need to arm themselves with the most accurate and time-sensitive knowledge when you're preparing information for financial statements. So if you're talking about developing cash flow estimates, what does that include? Well, that includes things in regards to, you know, what's the current interest rates and the borrowing rates? What's your access and availability to cash and capital if you need it? You know, what's going on with government, and are they issuing any new funds that may allow you to access funds? So those are all things you need to think about. So I have here, you know, how is it possible really to arm yourself with the most accurate information when we're considering estimates? Well, isn't part of the estimating process using management judgment? Yes, it is. So using management judgment and your knowledge of what's going on, not just in your industry, but it could be within your jurisdictional sector of where you live. I mean, I know companies, I live in the Midwest, and there's some companies that are doing fine. I don't want to say well, I'm going to say fine, but other companies that are in their same, you know, sector that are struggling. So you have to be able to evaluate what is comprising information you need to make, whether it be cash flow estimates or other estimates going forward. It could depend on your consumers. It could depend on your vendors. It could depend on your stakeholders and, you know, how quickly individuals are paying your company. So those are all things that, yeah, we're going to have to apply management judgment, and we're also going to be end up using a lot of subjectivity. And what's going to happen is as we continue down this road of, gosh, I would have hoped by now COVID would be a little more under control, but as we continue down the road of getting somewhere to a new normal, we're going to have to continually make adjustments to those estimates. So you may have made some disclosure maybe in the second quarter of this year, and then all of a sudden, because of things that are happening in your area, a lot of the basics, assumptions, the concepts behind that may have changed. So you need to make sure that when you're preparing your financial statements, preparing your forecasts, that you need to make that clear. The most important thing is that the information is accurate and time sensitive. That's what's going to support your estimates. So we face a lot of challenges in developing reliable estimates. It's not easy to develop estimates anyway. I like this clip art over here. We have our little charts and our graphs and our Excel worksheet, and we tend to, you know, base our estimates on a variety of factors. Well, the variety of factors could change in the current landscape. And again, like we said, the economy, your customer base, your vendors. You know, vendors are going in and out of business almost like regularly. So we're getting longer lead times on on purchases that we have out there, which is creating problems for retailers in actually distributing the product, which then consumers are getting tired and saying, I want to cancel this. And, you know, the retailer saying, well, we've got it on order, you know, it's being shipped or whatever, but it's in the logistics, you know, area, and it's ready to be picked, but it hasn't been shipped yet. So you run into a lot of problems. So I want to review a few factors that I found from some leading experts that talk about what you should be asking yourself related to considerations for certain estimates. So when considering the impact on cash flow, think about how is overall liquidity for your organization looking, and how is it evolving? You know, you may have accessed some of the government funds that came available through the CARES Act and the Payroll Protection Program. All right, that's been a year ago, and some of you may have accessed it more towards the end of the year. But what's happening right now? I mean, we are in what, September of 2021. So there's a lot of things that have changed. There's a lot of things with that particular area where you had to you know, ask for forgiveness. And if you've gone through the loan forgiveness process, you know that it's, you know, there's a lot of factors to consider. So those are things that you're going to have to consider. Also, to the extent COVID is adversely impacting your revenues, are impacts material to sources and uses of your funds to keep your operations viable, and the materiality of any assumptions about the magnitude and the duration of COVID's impact on your revenues. Every company is different. The retail industry, of course, is very much different than the healthcare industry. So the materiality of assumptions related to COVID are going to be very different from the retail industry than it is probably for the medical industry. But with a lot of the government programs that have come to an end, like some of the information on unemployment, you know, that came to an end the early part of September. Some of those things are going to impact how companies are really looking at their overall revenues. So think about that. Think about, are any decreases in cash flow for operations really having a material impact on liquidity and position output? If it is, you're going to have to start thinking, if you're a public company, is that impacting your credit rating? If it's impacting your credit rating, then that may impact your ability to access lines of capital. Also, have revolving lines of credit been assessed or raised, or has capital been raised? If so, you need to make sure you provide the right disclosures with your investors with a complete discussion of your financial condition and liquidity. This is, again, something, okay, if you're not publicly traded, you may go, I don't have to do all of that. This is from the SEC. This is part of what they're telling their publicly traded companies, but it's also best practice for other organizations, not-for-profit, small organizations. If you've had revolving lines of credit, and maybe revolving lines of credit, your credit rates are changing on a monthly or quarterly basis or something like that, are you going to have to raise capital? Those are things you're going to want to consider putting in your disclosures in your financial statements. Also, another question, have COVID impacts affected the ability to access traditional funding that you've had on reasonable or similar terms in recent periods? You may have some traditional funding sources that you've used in the past, and that could be, you know, banks or affiliates that you work with continually. Well, of course, they're having their own issues now, right, too. So there may be an increase in the cost of accessing those funds. It may take longer to access those funds. So you need to think about that as you're moving forward and thinking about, what's my cash flow going to be? And if I need to access funds, you need to know how long it's going to take you to be able to go through that process. Also, have additional collateral or guarantees or equity been provided to obtain funding? Those are things that you're going to want to disclose within your financial statements. If you've had to have, if you're a smaller company and had to have guarantees by some of your major shareholders because you had to access funding, those are things you want to disclose. If you've had to put certain things up for collateral, maybe it's your accounts receivable, maybe it's your assets. Those are things you're going to want to consider and disclose. Also, has a change or maybe a potential change to your credit rating impacted the ability to access funds? And I mentioned that a little bit earlier. Companies should really be watching, how the market is assessing their current credit and their credit rating abilities, because that's going to always impact your cash flow and your ability to access cash flow. Here's a few more questions. Have customers had their terms been altered or extended? Or do you have refund periods? That's going to impact your cash flow. If you've extended their terms and, previously it was 30 days, now it's 60 days, that's going to impact your cash flow estimates and how you're going to develop those. Also, what about extended refund periods? We're used to that in the holiday season, right? A lot of companies will start saying, oh, you purchased something in October, we'll give you till, I don't know, January 15th to return because of the holiday period. Well, right now with COVID, a lot of companies are giving extended refund periods, but there's a lot of conditions attached to that. So you need to make sure with your organization, what are you tracking your refunds, and are you tracking when they're coming in? Have those actions materially affected your financial condition or liquidity? It's amazing how often, people sometimes will buy on impulse, okay, and then they may have it for 30 days or something, then decide, I really need to return this. And so then they return it. So do you have some history beyond what your previous refund periods were? And then if you've extended them, how that's working right now and how that's affecting your cash flow. Think about, have other contractual arrangements maybe been modified to actually revise terms that could materially impact your financial condition, your liquidity, or your capital resources? So contractual arrangements, that might be with vendors, it could be with customers, would be with partners, joint venture partners. If you're a big construction company and you have joint venture partners that you have contractual arrangements with, have those been modified? And if so, have the terms been revised? Maybe they're not paying you every month, maybe they're paying you partial payments. Well, that's going to all impact your ability to make proper cash flow estimates. Another area, are supplier financing programs being relied on, like supply chain financing, okay? That's what SC is. Structured trade payables, maybe reverse factoring or vendor financing. Are you relying on those things to manage your cash flow? If you are, those are inputs into your cash flow estimates, and you need to understand how those individual elements are possibly, are they, helping you, or is there some conditions within each of those areas that has created issues in regarding to cash flow? Have those arrangements had a material impact on the balance sheet, your statement of cash flow, or your short-term and long-term liquidity? And if so, how? Those are things you all need to ask yourselves and, possibly move forward with disclosures, and it might change your estimates. So the pandemic itself, yes, it's causing a lot of volatility in our healthcare sector. It's causing a lot of volatility in just how people think these days. There's very polarizing views around the impact of the pandemic, whether you should be vaccinated or unvaccinated. But what we have to realize is that this is something that just really is unprecedented. It's causing volatility in a lot of areas. Now, it says here in financial markets, and we haven't seen the impact in like our financial markets where, you've probably seen your 401ks and stuff have actually gone up. And the financial markets aren't really reacting as adversely as we maybe thought they would in regards to COVID. Originally, they were saying last year that upon the news that the vaccine was there, there was some positivity. The financial markets kind of felt like things were going to turn around. Now, a lot of it is there has been a little bit different sway in the financial markets, and that's because there's a lot of uncertainty with this new Delta variant that's out there and how it's going to impact, businesses going forward. Hopefully we will not have another shutdown. I really don't see that coming. I don't think the government would do that again. But all these things are threatening businesses and challenging your management teams. So you need to focus on specific areas to position your business for what's coming next. I hate to say have a crystal ball, but maybe look outside the box. Properly evaluate your cash flow estimates, what you utilize, what your inputs and outputs are, and what those estimates are, what the core components behind those are, how they may be adjusted. So in a volatile or a slowing economy, we really need to get an immediate handle on cash needs. If you were someone that was a financial person or a treasurer or maybe controller in maybe a small to moderate sized company in the early days when COVID shut the economy down, probably one of the first things you did when you went into the office was look at your cash flow for the day. And that's because you had to know, were you going to be able to operate? You maybe had to lay off employees or furlough employees. So there were a lot of things that were happening. All right. Yes, we're a long way from where we were last year about this time, but we're still having a lot of questions around what's going to happen to the economy. And is it going to slow down more, or are we going to have bigger impacts? So really take a critical view of your own operations, review your existing cash flow processes, and make sure you understand how potential disruptions in any element of that process could affect your own company's liquidity. I know people that are like maybe in the car business, and there are new car sales, used car sales. Well, the car business has been hit tremendously hard, not just by COVID, but with the issue of the chips and some of the newer vehicles not being able to be produced. So, you go out and try to buy a new car these days. I don't care if you want a Volkswagen or a BMW or a Honda or whatever it is. Sometimes it's like 6 months or more before you can actually get that particular vehicle in. That's impacting those dealers' profit margins. It's also impacting their cash flow. So you need to look at how it's impacting you. What about if you're a not-for-profit? Let's think about if you're a religious organization. Is your religious organization open back up where people are coming back in and you're getting your cash donations and things? A lot of, at least here in the Midwest, we're back kind of open for business, but there has been a huge decline in the number of people that are actually going back to those types of services. They got used to the online services, rather do that, and that impacts maybe how much they are giving to their charity. So those things, whatever business you're in, you need to really evaluate that. And evaluate your cash requirements on a frequent and routine basis. Maybe you evaluated it once a month in previous decades or previous time prior to COVID. It may be required weekly or maybe even daily. You have to ensure you have reliable and timely information that is relevant to your own business and relevant to your area of the economy, to make sure you're developing a proper estimate. So another thing that we have stressed on other issues, and this is not just with the CARES Act and the Payroll Protection Program, but it affects your cash flow. Communicate with your bankers and lenders frequently. Make sure you have an understanding of the need on any of your loan covenants and what could result in a loan covenant violation. Maybe what your debt requirements or your need to obtain cash flow or short-term loans, and use that information in forecast. So it's really, the whole process of communicating with your primary lenders is significantly important right now. Information needs to be appropriately reflected in your cash flow estimates on a timely basis. Strategically managing your working capital, what you have to run your business on a daily basis. Maybe you might have to go into potentially selling inventory or minimizing new inventory purchases to generate cash. There are ways that you can manipulate different areas of your business to, kind of loosen that string on your cash flow. Evaluate the viability of customers and suppliers. And this goes with cash flow actions, but also just with your general overall business. Don't assume your customers are financially healthy. Everybody is going through different experiences during this time period. I'm a long-time internal auditor, and I've got external audit background. And as internal audit, maybe we used to look at customer or supplier viability maybe once every 3 years. Well, that's not adequate right now. Things are changing so quickly. You need to reevaluate, take out some of your contracts, reevaluate credit terms with current customers, negotiate the shortest reasonable terms that you can get to make your cash flow more effective. Carefully review the credit worthiness of any new customers before extending them credit. You want to make sure that they have the ability to pay. And on the supplier side, you want to evaluate your supplier base and determine if your current agreements are still the most favorable for your business. You may go back and look at a lot of your current agreements, and there could be a possibility some of those vendors are on the verge of maybe not being able to continue business. You need to know that sooner rather than later. Continuously monitor your accounts and minimize receivable collection time. That's going to help your cash flow process. And that's a pretty important area in regards to maintaining that liquidity. And then, of course, negotiating to the best you can favorable credit terms with your suppliers, and then also on the other side with your customers. So from a cash perspective, and this is just the cash forecasting area, and then we'll talk quickly about subsequent events and going concern. Make sure you understand what is your minimum cash and liquidity requirements to operate, and also have a tolerance. Is your management saying that minimum needs to be for the next 3 months, the next 6 months? What is it? Establish a robust short-term cash flow forecast. Run multiple scenarios. What if something more specific were to happen, a vendor were to go out, or you lose a major customer? Understand how that impacts your cash flow. You want to take actions to protect your own position and establish a central point of control for all communications in relationship to cash flow. If you're the CFO and you come in one morning, or you're the controller, and you realize, oh my God, we're about to violate some debt covenants, we don't have cash flow, who are you going to call? And I don't mean that as who you're going to call Ghostbusters, but who do you communicate that to? The CEO? Is there a management team? Is there a board or an oversight body? Make sure you know what that central point of control for communications is. And always a good suggestion is develop contingency plans for your operations and your workforce. There are a lot of companies out there that have had to furlough people. Right now, interesting enough, at least in my area, we're having trouble finding workers for areas like some of the retail, grocery stores, those types of things. I go to just my local Panera, and once in a while you see a sign up in the door that says we're closed from 2 to 4 today because we don't have staff. All right, what's your contingency plans for your workforce to make sure that you can move forward? All right, so that's a little bit about about cash flow. Let's talk about subsequent events. All right, if you look at this slide, subsequent events, as an accounting person, that you can have a type 1 subsequent event and a type 2 subsequent event. Type 1 is recognized. The underlying condition existed at the balance sheet date, and the financial statement effect you recognize in the financial statements. A type 2 is not recognized. the underlying condition did not exist at the balance sheet date. It happened after the balance sheet date, but maybe before the financial statements were issued. So you want to disclose the nature of the event and range of estimated impact on your financial statements. If it's not reasonable to estimate that, you still must disclose the facts. So that's our basics behind subsequent events. For entities with calendar year ending after December 31, 2019 or earlier, okay, that was right pre-COVID, most subsequent events related to the impacts from COVID are likely type 2. And here's some of your examples. Accounts receivable, customers' cash flow issues and difficulty paying their accounts that directly result from COVID. Notice that, from COVID is a type 2 event. In contrast, a condition that existed prior to COVID and existing at the reporting date is going to be type 1. So if this is a customer you've traditionally had problems with, you have to be careful about whether you can call that a type 2 event. There's investments. Subsequent market or fair value declines are typically type 2 events right now, they're saying, in regards to COVID. You know, the market is reacting to what's happening out there. Asset impairments, most are type 2, although the impairment models under GAAP vary depending on the asset. And we'll talk about that next quarter, but that's something that you need to be aware of. Lease modifications, terms that affect both parties, are typically the type 2 type subsequent events. Loss contingencies, if you have an underlying causal event for loss contingency requirement that didn't occur before period end, then accrual needs to be made. However, additional disclosure may also be required. Then there's that word there, going concern. You need to take into account the effect of future cash flow projects, operating results, and other facts subsequently affected by COVID, again, COVID, within 1 year after the date of the financial statements are issued. So if you're disclosing something COVID related, going concern, that's what you're thinking about. And then of course, taxes. We all love taxes. Various provisions in the CARES Act have actually been highlighted as type 2 subsequent events. Also, COVID considerations may require a reassessment of whether maybe deferred tax assets are actually realizable at the reporting date. So if you're trying to understand a little bit more about subsequent events, and I think Beth will show you how you can look that up in Cch Manager in a minute, the application of the subsequent event accounting standard is under Accounting Standard Codification 855, and it's subpart 1020. It's going to be challenging. You have to be careful, take sure that you're, take caution that financial statements are not adjusted for events and conditions that did not exist as of the reporting date. However, to prevent financial statements from being misleading, you may need additional information that reflects significant or new events or conditions that should be assessed for disclosure. So consider things like, are events related to COVID-19? Maybe you have some lawsuits or bankruptcy issues. Are they providing additional evidence about conditions that actually existed at the reporting date? All information that is actually available to you before the financial statements are issued or available to be issued should be considered when you assess conditions on which your financial statements are based. So events might represent the culmination of various conditions that existed over a period of time and could have existed maybe prior to the reporting date. So those could very well be concluded as type 1 events, but this is one of the other areas that the SEC and PCAOB and FASB has said, okay, if you're going to make a distinction between type 1 and type 2, make sure you appropriately document your reasoning. The pace and the spread of COVID, including the Delta variant after the reporting date may not provide additional evidence about conditions that actually existed at the reporting date. So we're going to have to use a lot of judgment that's going to be required to assess events that occurred after the reporting date. And then we're going to have to distinguish between the impacts directly related to COVID and other conditions that may have existed at the reporting date. So here you have an example. You might have an employee legal matter that occurred after the balance sheet date that may be attributable to factors that are unrelated to the COVID-19 pandemic. So again, you have to consider, is that type 1 or type 2? In periods that ended just before and after the COVID-19 outbreak, just before, now we haven't had an after yet, but they say, okay, after, the potential accounting implications are more extensive and they're going to require more than just word disclosure. Entities are going to have to assess the impact on both the recognition and measurement of any significantly affected amounts related to your financial statements. All right, so my last area here is going concern. So I'm about on time. I have a few minutes and then we will turn it over to Beth. Going concerns. All right, this is not a word we like to hear. In our accounting language, when we learn in school, you see the word going concern and you think that's a good thing, right? Or continue to be going concern. But auditors, financial professionals have to assess a business, at each reporting period to determine whether, hey, are we going to be able to continue as a going concern? So entities really need to take careful consideration as to whether there's factors out there in relationship to your industry or business that could raise substantial doubt about whether you're going to be able to continue your business on an ongoing basis. When you're talking about in connection with preparing financial statements for your annual or interim reporting period, GAAP actually requires management to evaluate the entity's ability to continue as a going concern. So I want you to look at these things because if you have external auditors, they're going to ask these questions too. Management is required to consider whether there are conditions or events that, when considered in the aggregate, so you put all these things together, all these individual things together, do they raise substantial doubt about the entity's ability to continue as a going concern within 1 year after the date on which the financial statements are issued? These conditions are able to be mitigated. And you also have to consider whether these conditions can really be mitigated by management's plan. Management may come up and say, yeah, conditions existed, but we have a plan to mitigate that. All right, your auditors are going to sit there and go, okay, yeah, we agree with you, those conditions existed, but we're not quite sure management's plans are appropriate and are going to truly mitigate those issues. So if management concludes there's substantial doubt, then you have disclosure in the financial statements that's required, even if management plans to alleviate that substantial doubt. If management plans do not alleviate that doubt about the entity's ability to continue as a going concern, then there's GAAP that requires management to state in the notes to the financial statement there is a substantial doubt about the entity's ability to continue as a going concern within 1 year after the date of the financial statements. All right, so that rounds out a little bit of my portion of our discussion. I'll go ahead and we'll let them launch this poll. And do you currently subscribe to an accounting research service? So yes, I have a subscription to CCH. Yes, I have subscribed to another research service, or no, I do not subscribe to a research service. So go ahead and answer that poll. And with that, I'm going to go ahead and turn it over, and then we'll turn it over to Beth to be able to go through Cch Research Manager, which I think if you haven't seen it before, you'll find it very beneficial for a lot of these issues.
Thank you so much. And I'm just going to jump in really quick. Just a reminder, I did misspeak earlier when talking about CPE. Please answer all 3 of the polling questions to get full CPE. So we have one more after this one. And Beth, whenever you're ready, or when we finish the poll, sorry.
Okay. So after you finish the poll, you'll pass it to me?
Mm-hmm.
Okay, great.
Just gonna give a few more minutes here, or I'm sorry, seconds.
Okay.
All right, we'll close that out. And Beth, whenever you're ready.
All right. Are you able to see it? Accounting Research Manager?
We do not see your screen at the moment. There it is.
Okay, great. All right, yes, thank you. My name is Beth Patrick, and I am one of the solution consultants for CCH Accounting Research Manager. And we have a lot of great information that kind of piggybacks with what Lynn was talking about. And one thing that's great about the service is, like she said, you could go to the FASB website, you can go to the SEC, you can go to the PCAOB, the AICPA. There's so many sources to go to, but within Accounting Research Manager, we do pull all of that together for you. So even here on the home screen, if I scroll down, we created this COVID resources last year, and we continue just to add to it as things come out in regard to the accounting section from the FASB, from the SEC, from the AICPA or PCAOB, and even the GASB has some information about that. So just know, instead of going to all those sites, we do have all of that here available. So I just wanted to focus on a few things she talked about, and what makes it, I think, a little bit easier within Accounting Research Manager. So she mentioned 855, that standard on subsequent events. So if you did go to the FASB, let's just click into that really quick here. And we knew, she told us that number was 855. Any of the standards that you go into, you'll be able to, of course, research that. I mean, that's really straightforward. But what happens, when you look at this screen, it's not that user friendly as far as, where's my answer? Where's the topic I'm looking up? So if I want you to notice, see this ARM accounting standards? This is where our professional services group will take that standard 855, and they want to present it in a way that is more topical. So you're going to see here, we follow the structure of 855, and here's that section 10. But look how we've listed out, hey, these are some of the major issues that our customers are searching for. And we don't want you to have to always search for it and look for it and get hundreds of hits. So let's just say, okay, I wanted to look at this non-recognized subsequent event. And I'm a US based. If I was international based, I would pick that. But I'll just go ahead and pick US. So then what our professional services group does is we want to get all the information for you, but we first want to start with a summary. So if you read through this is a lot of what Lynn was saying. This did not exist at the date of the balance sheet. Okay, so you're reading through that. We're seeing some examples. Now, after the summary, though, our group will link you into the codification. So we'll make sure that you see that information, and you just click onto these little white paper links. That'll take you specifically to that authoritative. Hey, looks like there's an illustration that the FASB provided. We could click on that. We're showing you that information. Even it looks like 805, there's some 830 in here. So anything that might be related is pulled together. And when you do a keyword search, that's on you to really go through and find that. If there's something from the AICPA, we'll tell you about that. And then the last thing would be our interpretations. So if you want to go into some additional guidance, some further examples, that's what this would do, really take you into a deeper dive. So now you could just click into this, do your research, and not have to spend as much time. So that's just one way to start your research. If you didn't know that the 855 that Lynn had told us, we actually have a topics A to Z, and you can look up the word that you're looking for. So I could actually go to S I could type in subsequent to, but let's just say, hey, I don't know all these numbers of the codification. Here's the word subsequent events. Where do I start? That's not a problem. We want to help guide you to it. We're going to give you a definition, but look where we're sending you. There's that 855. And then, oh, well, look, there's something in this 452 that might be related. Down below, this is more audit related, but today I'm just focusing on the accounting. But if I clicked into this 855, this is exactly where I just was with you when I was showing you kind of our topical approach on 855. Let me just scroll down. And we went into one of those topics there. So if you don't know the number, one of the things our customers like, hey, let's get more people involved in the research. Maybe they don't know these numbers like I do. Topics A to Z is a great teaching point. Speaking of COVID, we also have right here a checklist. We just released our 9:30 checklist. So those are updated. People do like the fact that we update like right at the end of the quarter. I saw our team has already produced that. But there's also here a COVID-19 financial reporting checklist. These will be in a Word format for you. I think I have it open. So when you open this up, this will go through some of those SEC items that we were talking about as well, just to kind of walk you through, make sure you're not missing anything. If you want to go look at any of the official links from the SEC, these blue links are going to take you directly to that and give you a little bit more explanation. All right, now let me go back into Accounting Research Manager. So that's just a couple of ways, like if you went into the FASB, if you wanted to go in topically. But what if you just want to type in a keyword search? Let's do that. Let's type in the going concern. And I'm going to put it in quotes because I do want those two words together. So one of the things I want to highlight when you do a keyword search, and I might need to turn off my camera if this slows down. There we go. I'm going to go ahead and filter this by accounting, or if I was looking at more of the auditing, I could do that. But today we're talking about accounting. So the thing that we do, remember I was showing you Accounting Research Manager going into the standards 205. I see that topic going concern. So I'm going to go ahead and look through these. And when I always tell our customers, look for these hits that start with our acronym. I really wanted to know more about going concern and the disclosure. Okay. Now, what did I have right now? I'm down to 2,000 hits in the accounting library. So instead of me going through that, here's a topic that's interesting to me, going concern and the disclosure. Instead of me having to go through those 2,000 hits, our professional services group has already done this for you. They start off with the summary. What do I need to know about this? So just like I was showing you earlier, this is the point of Accounting Research Manager, is saving you time. We'll pull this together for you. This is where you need to go in the FASB. These are some of the example disclosures. Here's our interpretations. Do you need some example disclosures? Click right into here. So see how I didn't need to go through those 2,000 hits. I now can just go in, start some of my research right from this great page that I found by doing the keyword search. And this would have a lot of examples. We're going to be running out of time, so I won't go through all of that, but we do take you through the disclosure requirements, and then we give you a lot of examples that you can copy and paste. Everybody likes that. The last thing is I wanted to talk about is just our 10K lookup. This is one of the favorites with our customers, whether or not you're public, whether you're private, whether you're a CPA firm, everyone seems to love this tool because they're always looking for example disclosures. So let's say I'm just going to type anything you want to look for, you type it in. So I'm typing in COVID-19. And what else do we talk about? Let's just talk about, she talked about cash flow today. I want to find both of those words. I want to look in the 10Ks, but if I wanted to look in Ks and Qs, we can do that. And let's just say I'm a retail company. I want to go in and look at just my industry. I think that'll be right here. And search. So instead, I just typed in what I'm looking for. I want those two words. I want it to be retail. I've got 62 examples. And this tells me when it was filed, the term count, how many times it's in there. So now I can just quickly go and look at this first one. It's going to highlight the page that we found the words that you're looking for. So you don't have to pull up the whole 10K and start searching through it. We are telling you where that is. So this one looks, I've got COVID and cash flow. Let me go into this and it'll take you right to that page. Here's some examples. Maybe I'm a retail, I want to look at some of my competitors. Maybe I'm a CPA firm, I'm looking for other examples for my client. This is very helpful and very quick. By industry, taking you to it. If you want to highlight, copy, paste, that's what customers are doing now. All right, so this 10K lookup does a lot, but that's probably the most common. Just keyword search, pick your industry, and you'll have all of those results. And then the last thing I wanted to talk about, just because we are talking about CPE, we do have a CPE website, Accounting Research Manager will link to it. And we offer live webinars, we offer self-study. So if you talk to your account manager and you wanted to know more about, how can I get some CPE credits? How can I get that for my firm in bulk? We have some great integration and some great pricing around that. And it's very easy to take. I just went in ahead of time and did the A&A and accounting. But if you needed ethics or Excel or you're more tax related, you can see there's literally hundreds of courses in here for you. So I know we have one more polling question and you need to answer all three. So I'm going to turn it back over so we all have time to do that. But I appreciate all of your attention today and we look forward to talking to you next month.
Okay, well, final polling question is up. Just would you like a more in-depth demo of the tools and content available on CCH Accounting Research Manager? And while everyone is completing the final polling question, Lynn, do you have anything else you'd like to add before we wrap up the webinar?
No, I think that Beth covered a lot of great concepts, and I really do encourage people to take advantage of CCH Accounting Research Manager because as she mentioned, I mentioned early, yeah, you can go to all these different sites, but this is kind of a little bit of a one size fits all, and it's more of a consolidated way to be able to get your information.
Yeah, and I just remembered I had a going concern checklist I meant to bring up too, but if that was anything somebody needs, we have that in Word as well that really walks you through that particular topic. Thanks again for your time.
Yeah, thank you so much. Thank you, Beth and Lynn, for giving us this great webinar today. Just a reminder, CPE credits will be given out between 2 to 4 business days at the conclusion of the webinar. We want to thank you so much for joining us, and we hope this was super insightful, and we welcome you to join us for more Lunch and Learn. So thank you, everyone, and have a great day.
Have a great day. Bye-bye.